Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Epstein, and here we are. And this is Wednesday, the 14th of September, 2011, the time about 3:05 in the afternoon. You know, an interesting day today. The Tim Geithner rally, as I want to term it, as he stepped into the market and gave the market some reassurances as to what he thinks is going on in Europe, how the market might be setting up, be it a euro bond, be it a liquidity bank, a TARP-type deal. He thinks something is brewing there and that they're not going to let the EU zone go away, collapse in any manner. I think that helped the marketplace. It certainly, if you will, put back in play the curve yield, as I think today the market is starting to focus not just on Europe, but what's next week? Isn't that the Fed meeting? And I think the market's going to look real hard at the long-term money and say, okay, we've got the short-term where we want it. Now let's break the yield curve even further, flatten it out, and that's what I think's going on. In the gold market, we're down $8, $9 on the day. Okay, market got up to 1848, didn't go anywhere, came back down to 1811.5, not going anywhere. I'll explain why in a moment and what I'm seeing there. You're up a bit in the euro currency, and you've been everywhere today. You got a 200-point range, a 2-cent range, if you will, almost in that. That's big. That is not small. The dollar has sort of gone, oh, okay, so they're swinging all over the board. Let's see what they come up with. And as you know, today was the telephone conference between the heads of Germany, France, and Greece. I haven't had a chance to review what they said, but I can tell you in the stock market, people think that whatever went on there, it wasn't that bearish, and that's one of the reasons gold's probably down. You know, you can just read the market and have an idea what's going on. So let's take a look at the gold and see where we're at. And this is what that chart looks like, going way back here to May, actually. Okay. What the market, I think, is doing is it's building another base, a price zone to work from. I think you'd agree with me that if we come back here to the May-June period, the market was trading, let's call it 1,600, down to the 1,450 level, went up, create another base. The question is, will this low, 1,705, be taken out in the longer term anytime? And if I blow up the chart and give you an idea with the swing lines, I think the question is yesterday's low. Big important low now. I think it becomes the low you look at, 1794.80. If it's taken out, it just adds another level of confirmation that you've got lower highs and then lower lows. I know how it looks on the chart, but this low is actually not above that. It's under 1794.30. It's around 1793 and a fraction. Right there. So you've got a pattern of higher lows, lower highs. You're coming in just like that. And in today's gold report, before I go too far, I discuss all that. And I draw the lines for you in the report to see. I give you an idea of the seasonality of the market, what I'm seeing. And I write this about every 2 weeks. Got in the office at 4:30 in the morning, maybe 5 o'clock here. Began writing and got this published about 7:30 or so. So today's action fit right in with what I was looking for. You'll understand why. How do you get this? You call us at 1-866-973-2077. Ask for the gold report. They'll make certain that you get it. It is free. And you can also go to our website and sign up for our investors kit and get it there as well. All right, but let's keep going as to where the market's at. The one thing I do whenever I look at a swing line study is I put on a filter, and that filter is what I call the line in the sand, or the 18-day moving average of closes, which is right here. And for 1, 2, 3, 4, 5, 6 days, this market has been playing around it. And I could really argue that it's been playing around it for even a little bit longer than that. It's trying to figure out what to do next. Tonight going home, I think you'd have to look at this market as what? Neutral. Take out 1794.80 and you create then the pattern of, for certain, lower highs, and then you begin the pattern of the lower lows. Let's reverse that and talk a different game. What if you take out today's low and then take out today's high? You would confirm a bullish pattern. This is a key day today. And how we come out of this range is going to determine what I next tell my subscribers to my newsletter. I'm waiting to see myself, but this will keep me now up tonight watching this just like a hawk. Assuming this is taken out, and you start a bear trend, well, you might be going down to the closest of 1732.40, which is the 45-day average of closes. The 100-day is way down here at 1618, or the Bollinger Band of 1758.10. And to me, the more likely number, if you took out 1794.80, would be to look for potential support at 1758.10. Do the opposite flip that I'm talking, which would be ideally to take out today's low of 1811.5, but not 1794.80, and then turn up, and I'm going to make an argument for 1903.60. In terms of momentum, the market has worked itself out of being slightly overbought, and it's as neutral as can be in momentum. So I'm really gearing in. I think today's a major day. Instead of me waiting to write my report this afternoon about all this, I made sure to get here this morning. I saw the setup starting to happen last night, and I wanted traders to know about it. So I think today's report's important. What else do I think? I think silver's still in a downtrend. Unlike the gold, you have clearly lower highs, lower lows. You've rallied up, haven't quite gotten to that 18-day average of closes. Has proved to be a resistance zone, and I'm looking for maybe 39.50. I have no reason yet to get onto the bull camp. In fact, nothing on this chart can immediately turn it up the way I'm seeing it. In the copper market, I looked for further test of the Bollinger Band. If the market wanted to drop, that number is 390.15, let's call it. You're at 390.95. So you hit it again, you found support, and you're getting very oversold. Here's down the road what I'd like to see. First of all, I'd like to see world economies stay stable. That's what's been weighing on the copper. But I think copper is trying to establish this whole area as a base to ultimately work higher from. I say higher because I don't think you bet against world economies. I think you have to figure at some point they're going to try to do something in the way of stimulus, and if they do that, copper's one of the beneficiaries. A lot depends on what China's going to do or not do. Last time the market was down in this area, I was reading reports about a week afterwards, back towards here, that it was suspected they were buying. Are they doing so again? We'll have to wait and see, but I certainly would not advise going short at a Bollinger Band or under it or into an oversold condition. In the crude oil market, crude is overbought. It's that simple. You're stuck in a trading band. You can see that in the Bollinger Bands, which are designed to keep the market trading within them 95% of the time. And you tell me what you've done. You've taken out this volatility of this break that began right here at the beginning of August, and you've gotten back to more normal trading. And for everybody listening, that's the thing I'm starting to see in the futures. We're starting to get back into this more normal market rather than this wild volatility that's there. Sure, it's volatile, and you're swinging $1.60 a day, so I don't want you to think he said, oh, it's not volatile. But it's not what it was doing back here. And that, to me, is the key, and I'm seeing this type of pattern, be it in the gold market, the silver, the copper market. I'm seeing it starting to show up in a number of different markets. In the Brent, you tell me where you're at. All you do is keep hitting this 18-day average and fighting your battle. You've still got the pattern of higher lows and higher highs. I think if you take out 113.30, you flip-flop and you go to the upside. Take out 110.42, you flip-flop and you go to 108.28. You're right in the middle of no man's land here. In the gasoline, the most I'm looking for was a challenge of the Bollinger Band. You're oversold already. You've come down from 292. You missed it today by a penny. Okay. You're in a zone. That's all that I could say. You're down another penny and a half today. I wouldn't be looking for much more than 267 on the downside on the market before a rally develops, or at least sideways action from this point. I think a lot of the downward energy's been spent. In the note market, you can go anywhere. Notes have gone up, hit the Bollinger Band a number of times, not able to penetrate, and they're leaking. They're not breaking. They're leaking back. The market's going to probably keep you on pins and needles going into the FOMC report next week. Right now, it's very difficult, and I think you'd agree, to be short the market unless Europe at least settles itself in some manner. And that's what I think is going on, and that's what the market's suspecting, that they're going to kick the can down the road a little bit Doesn't mean they're going to rescue Greece. It means they're going to buy time, get their banking system ready. If they have to take a jolt, it's a quickie, whatever that means, and the markets can recover. I think that that's the game plan that is going on. Now here's the gold-silver ratio, and look at how it's tightening again. You thought it was broad here, and I was talking that the trend was $40 to $45. I think if you go back on my tapes, you'll see that over and over. Now it's 43 to 45, so this thing is narrowing in very dramatically. Right now, the favorite is gold. Gold is gaining on the silver market. You can see that clearly on the charts, but you're up to the Bollinger top of 45.20 or 45.08 today. I'd wait and just see how it goes, and you've been stuck in this since May. After the market, if you think about it, silver got up to $50 an ounce roughly. The ratio fell to 32 to 1 silver. Now you're back to 45 to 1. You're in a sideways action. You've been here before. Just something to discuss. Really not much more than that. So with that, I'm Ira Epstein. You have yourself a good day, and I'll see you all tomorrow about the same time.